And we're also watching shares of Paramount that are down about 9% after an earnings miss as investments in its content, marketing, and international expansions bite. With a recap of the media giant's earnings and the broader streaming landscape, we've got our own Allie Canal joining us right now. So, Allie, tell us about this quarter and what stands out and what happened.
Yeah, well, good morning, Julie. It's very clear investors are not too happy about this. A miss on both the top and bottom lines. As you mentioned, profits really suffered as a result of those greater investments in marketing, content, international expansion, which Paramount has been really committed to. Weak advertising revenue as well. That declined 2% in the quarter. That's a big macroeconomic challenge that the industry as a whole has been grappling with. That weighed on the company's bottom line. CEO Bob Bakish, though, he focused on the company's subscriber wins for the quarter. We did see a significant amount of growth. Paramount Plus adding 4.6 million subs for a total of 46 million. Pluto TV also seeing continued success with 72 million monthly active users. And as a whole, the company has nearly 67 million subscribers across its direct-to-consumer services. And executives said that there's more room to run here. The problem, though, that Wall Street seems to have is on the profit side. Can DTC alone save Paramount amid these linear TV challenges? We heard from Wells Fargo's Steve Cahill earlier this week. He issued a second downgrade in less than a month on the stock. He suggested that Paramount take on the role of an arms dealer, similar to what we've seen from Sony, maybe license out or sell off some of those assets. Bob Bakish was specifically asked about this strategy on the earnings call, but he said that's not really part of their vision. He's really committed to keeping content on the platform. He says that's ultimately how you deliver value. Bakish also confirming that price hikes will be coming. He actually said this on our air during Yahoo Finance's All Market Summit. No timeline has been given on that, but that's something to look out for as well. Overall, though, investors really struggling to find that silver lining. Shares seem to be accelerating their losses a bit, down over 9.5%.
Allie, while we have you and we're zeroing in on the entertainment landscape, Netflix's ad-supported tier, that launching now too. Do we have a sense of where some of the conversations around where the what actual content will be on that ad tier are starting to net out?
Yeah, this is a big point of conversation right now. This ad tier launching officially in the U.S. tomorrow. And the company did warn that about 5 to 10% of programming will not be available on this ad tier due to ongoing conversations surrounding the rights to air ads against some of this content. The Wall Street Journal confirming that those talks are still ongoing with several major studios. And that includes some big guys you're seeing on your screen now: Disney, NBC Universal, Sony Pictures, Warner Brothers Discovery, Lionsgate. Some of these studios provide original content to Netflix. Others offer reruns, license their content. And we're talking about some pretty big shows here: Grey's Anatomy, The Crown, You. So it's very important that Netflix can get this right. Experts that I've spoken with have said advertising is the future for this company as it competes for subscribers and the revenue that comes along with that. We have Disney's ad tier coming out next month. Many players in this space already. So Netflix really trying to take a bite out of that market share. But in order to do that, you have to have the content of both the user side and the advertising side. So this is something that we will have to watch very closely as this ad tier rolls out.
All right. Nobody let Penn Badgley know that he might not be on the ad-supported tier. He might get upset. We know what happens then. Thanks so much, Allie Canal. We appreciate it.